They say the market reveals truth to those who know how to listen. Not truth about price, but truth about themselves. Every chart is a mirror, every candle a question, every decision a reflection of the mind that made it. This channel isn't about signals or strategies or shortcuts. It's about awareness, the space between reaction and response, the discipline to observe before you act, the courage to look inward when the market feels uncertain. Because trading isn't a game of prediction, it's a practice of perception. And the deeper you understand yourself, the clearer the market becomes. Welcome to Mind Over Markets, where we don't chase moves. We study the mind that moves us. I've lived through enough market weeks to know that silence can be the loudest signal of all. The week before, CPI and FOMC always begins the same way. Quiet charts, narrow ranges, and that deceptive calm that lures traders into believing they're in control. But control is a story we tell ourselves. Markets don't care about our plans, our analysis, or our sense of preparedness. They only care about imbalance between buyers and sellers, between fear and greed, between what we expect and what reality delivers. Monday morning, I sat at my desk with coffee that had already gone cold. The screens glowed softly in the dark. No alarms, no rush. Just that feeling, the one every trader knows before a major event week. A strange mix of readiness and hesitation. I told myself this time I'll trade the plan. It's a lie I've told myself 1,000 times, but a necessary one. Without it, you can't even sit down at the table. The plan was simple. No trades before CPI. No reactions during the release. Wait for structure, then act. Simple, right? But trading has never been about simplicity. It's about consistency under stress. As the morning session moved, the markets drifted sideways, but my mind didn't. It began its usual dance. What if this CPI surprises? What if the market moves early? What if I miss it? That's the first psychological trap of event weeks, anticipatory anxiety. You begin to trade the idea of movement, not the movement itself. You begin to anticipate, to simulate the future, to feel the emotional impact of a move that hasn't even happened yet. And in that simulation, your nervous system starts spending emotional capital before you've risked a single dollar. That's why many traders are already exhausted by Wednesday, not because of losses, but because of mental leakage. I watched a few false breakouts form on the S&P. Normally, I wouldn't care. But my brain, tuned to the tension of the week, wanted to assign meaning to every candle. Maybe that's positioning ahead of CPI. Maybe they're pricing in expectations. But here's the truth. Most of the time, maybe is just your anxiety looking for a story to hold on to. I closed the chart and stared at the black screen for a few seconds. It's strange how a blank screen can sometimes tell you more about your psychology than any indicator ever could. I remembered something I learned years ago after blowing an account during an NFP release. When you feel the urge to predict, it's rarely about conviction. It's about discomfort with uncertainty. You don't actually need to know what will happen next. You just want to escape the tension of not knowing. And in the markets, uncertainty is the rent you pay for opportunity. You can't avoid it. You can only decide how gracefully you'll sit with it. So I did what I've trained myself to do. I closed all positions, muted alerts, and went for a walk. That walk is part of my event protocol. It's not about clearing my head. It's about reminding my nervous system that I'm still in control of my attention, even if I can't control the market. When I came back, I wrote a note in my journal. This week, my job is not to win. My job is to observe myself while the market plays its game. By Tuesday, volatility started whispering again. Not loud enough to act on, just enough to make the mind restless. Gold started tightening into a wedge. The dollar index was forming what looked like a base. The market was holding its breath, and I could feel myself doing the same. That's when I realized something subtle. The more experience you have, the quieter your external reactions become, but the deeper your internal storms run. It's not that fear disappears, it just becomes more sophisticated. Early in my career, fear was obvious sweaty palms, rapid decisions, emotional trades. Now it shows up as rationalization, as elegant logic masking emotional impulses. I'm just positioning early, I'd tell myself. But deep down, it was the same old fear of missing out just wearing a suit and tie. That's why trading psychology isn't about suppressing emotions. It's about seeing their disguises. Every feeling in trading wears a costume. Confidence often hides insecurity. Patience can hide avoidance, and analysis can hide fear. When I finally understood that, I stopped trying to become emotionless and started aiming to become emotionally aware. Tuesday night, I reviewed my CPI scenarios one last time. If inflation came in hot dollar strength, equity weakness. If soft, the opposite. The logic was sound, the analysis clean, but I knew it didn't matter. Because no chart, no forecast, no strategy could protect me from my own limbic system. That's the secret most traders never learn. The market doesn't need to beat you with price. It beats you with anticipation. You lose not because you're wrong, but because you react too early. You burn out not because you took risk, but because you couldn't stay still while waiting. As I shut down the monitors that night, I reminded myself of one rule, my golden rule for event weeks. Patience is not the absence of action. It's the discipline to wait for your edge to arrive. CPI was coming tomorrow. I could already feel the collective tension building across the market, every trader watching, waiting, guessing. And somewhere beneath that global noise, I felt a calm resolve. Because after years of mistakes, I finally understood what trading weeks like this truly test. It's not your system, it's your self-control. Wednesday morning, the day of the CPI, you can almost feel the tension in the air before you even open the charts. It's the kind of day where even silence hums. I woke up before the alarm, long before the markets opened. The room was dark, but my mind was already awake, not racing, but alert in a quiet way. Years of experience have trained me to recognize that this is not excitement, it's readiness. The difference is subtle, but everything depends on it. Excitement wants to act. Readiness is simply willing to observe. I made coffee and sat down at my desk. No music, no distractions, just the screens and the hum of the computer. I wrote a single sentence in my trading journal before opening any chart. Today is not about profit, it's about behavior. That line centers me. Because the market's not my opponent, I am. The chart is just the mirror. I pulled up the data calendar again, even though I'd already memorized it. CPI release at 8:30 a.m. 10 minutes that could redefine the tone of the entire month. I reviewed the scenarios I'd written the night before. If inflation prints above expectations, dollar strength, equities down. If below dollar weakness, risk on sentiment. But I reminded myself the data doesn't move the market. The reaction does. And the reaction is pure emotion, pure psychology expressed through price. By 8:20, I could feel the pulse of the market speeding up, liquidity thinning, spreads widening. The chart looked calm, but under the surface, energy was coiling, like a storm gathering at the edge of the radar. I placed my cursor away from the buy and sell buttons, a physical distance, to remind myself not to react. The seconds began to tick down. 10, 9, 8. At that moment, I could feel it, that ancient human instinct that hasn't evolved since we lived in caves. The fight or flight system activating. It doesn't care that I'm not in danger, it only knows uncertainty. 3, 2, 1. The numbers hit, and everything exploded. Gold dropped like a stone. The dollar index shot up instantly. Charts flashed. Candles stretched. Within seconds, spreads widened beyond reason. And yet, I didn't move. I just watched. My breathing slowed, but my heart didn't. It was beating so hard I could feel it in my fingertips. Years ago, that heartbeat would have been the trigger, the cue to jump in to grab a piece of the chaos. Now it was just information, a reminder that I was still human. I told myself quietly, let the amateurs fight for the first move. You wait for the second truth, because the first move in every event is noise, an explosion of orders, driven by expectation and fear. The second move is the truth, the one shaped by logic, positioning, and control. As the initial shock faded, I began to notice the pattern beneath the chaos. A quick rebound, a pause, then a slow, decisive continuation. The numbers confirmed the story: inflation slightly hotter than expected. But the real data I was watching wasn't on the screen. It was inside me. I was observing my own impulses like a scientist watching a lab experiment. I felt the urge to act not out of analysis, but from a craving to participate. That's the subtle addiction every trader wrestles with, the need to be involved, to feel alive through risk. But I waited. 5 minutes passed, then 10. And when the pattern finally formed, structure, confirmation, alignment, I entered. Not out of fear, not out of excitement, but out of clarity. The trade moved in my favor, slowly at first, then with momentum. I could feel the adrenaline trying to return, whispering, maybe this is the big one. Hold it longer. But I've seen that movie too many times. The ending never changes. So I took partial profits where my plan said I would not, where my emotions wanted me to. I tightened the stop-adjusted risk and leaned back. It wasn't a big win, but it was a clean one. And in trading psychology, cleanliness is victory. When I closed the position, I didn't feel excitement, just relief, but not from the trade, from myself, because I'd managed to stay within the protocol. People often think discipline means restriction, but in truth, discipline is freedom. Freedom from chaos, freedom from compulsion, freedom from the constant need to prove something. I opened my journal again and wrote trade, taken according to plan. Emotional state stable, heart rate elevated but controlled. No impulses acted on. It might seem trivial, but this is the real work of trading. Not predicting price, but observing mind. Not controlling the market, but controlling the self who wants to control the market. After CPI, the charts began to slow again. The burst of energy faded into a new equilibrium. I could feel the collective exhale across traders everywhere. Some were celebrating, some were regretting, some were revenge trading already. But I just sat there quiet, because the real game was already over. The outcome wasn't the profit. It was the proof that I could sit in front of chaos and remain calm. Later that afternoon, I went back through the charts and saw how the market had cleaned out both sides before choosing direction. I smiled, not because I predicted it, but because I didn't need to. That's what experience gives you. Not certainty, but serenity. Not prediction, but patience. When I started in this business, I thought success was about control, mastering charts, indicators, and systems. Now I understand it's about surrender, mastering the only variable that truly matters: me. And that's the paradox of trading psychology. The more you try to force control, the more control you lose. But when you learn to let go, truly let go, clarity emerges on its own. As the sun set outside my window, I closed the platform. No need to chase anything, no need to check the P&L again. The lesson had already been learned. And it wasn't about CPI. It was about the mind that met CPI. Thursday morning felt different, lighter but not calm. It's the kind of stillness that comes after a storm, quiet, but carrying echoes of what just passed. CPI was over. I'd done my job, followed my protocol, stayed disciplined. But in trading, there's always another test waiting. And this time, it was the FOMC. If CPI is the spark, FOMC is the wildfire. It's not just data, it's the narrative. The moment when the market doesn't just react to numbers, but to meaning, to tone, to words, to pauses. That's what makes it so dangerous. Because numbers are neutral, but language is emotional. I spent the morning reviewing my plan again. Same as always, no trading during the statement, no reacting to the press conference. Wait for clarity, wait for structure, wait for confirmation. But even as I wrote the rules, I could feel fatigue in my body. Event weeks drain you not just from trading, but from managing your own reactions. Every time you hold back an impulse, you spend energy. Every decision not to act is still a decision. And discipline, like capital, is finite. I closed my eyes and sat in silence for a few minutes before the release. Not to predict, not to plan, just to center. I reminded myself of something I wrote years ago. The market doesn't punish lack of knowledge. It punishes lack of self-awareness. At 2:00 p.m., the statement dropped. Price exploded again one direction, then the other, faster than the eye could follow. Algorithms feeding on algorithms. Noise feeding on fear. But I didn't move. I just watched. The same ritual as CPI day. The first spike was up, then violently down, and then up again. Traders everywhere were being tossed like ships in a hurricane. For a brief second, my old instincts flared, that ancient part of me that wanted to dive in to catch the wave. But I didn't. Because I'd learned that control is not found in action, but in the choice not to act. 15 minutes later, the chair began to speak. His tone was measured, his words carefully chosen, but the market didn't care. It heard what it wanted to hear. That's the other side of psychology, not just our own, but the crowd's. Every trader thinks they're being rational, but in aggregate, we're a single emotional organism reacting to uncertainty. Fear disguised as logic. Hope disguised as analysis. I watched the price swing and thought, this isn't a chart. It's a heartbeat, the heartbeat of collective expectation. After the statement, I saw what I was waiting for. A clear structural break, momentum aligning with narrative, the fog lifting. I entered small, calculated, detached. Not to prove anything, not to recover, not to chase. Just because the plan said it was time. The trade moved smoothly, then stalled. I managed it exactly as written, took the exit, and closed the platform. No emotion, no story, just execution. And in that moment, I realized something that only comes with time. Mastery doesn't feel like excitement. It feels like peace. When I was younger, I thought success would feel like adrenaline, that rush, when everything finally works. But now I see that true success feels like stillness, a quiet mind, and even breath, no attachment to outcome. The charts kept moving after I stopped watching. They always do. The market doesn't notice when you're done, doesn't care when you leave. That's part of its purity. It just keeps reflecting. Later that night, I wrote my final notes for the week. 2 events, 2 trades, 0 impulsive decisions, full emotional awareness maintained. Then I added something I'd never written before. I'm proud of how little I needed to do. Because growth in trading isn't about doing more. It's about needing less. Less confirmation, less excitement, less validation, just observation, just patience, just quiet confidence. On Friday, I didn't trade. I could have, the setups were there, but I've learned that knowing when not to trade is as powerful as knowing when to act. I spent the morning reviewing the week, not for performance, but for pattern. Patterns in my thinking, patterns in my emotion, patterns in how my body reacted under pressure. That's the real edge, not technical, but psychological. When you start recognizing the recurring shapes of your own behavior, you begin to see that the market was never the enemy. It was the teacher. Every loss had been a lesson. Every mistake a mirror. Every reaction a reflection. CPI and FOMC, 2 events, 2 storms. But the real story was internal. The calm between heartbeats, the awareness between decisions, the moments when I wanted to move and didn't. That's where growth lives. Not in action, but in restraint. Not in noise, but in clarity. As the week came to an end, I looked out at the city lights from my office, each light flickering like a tiny heartbeat, a reminder of how many people were out there chasing certainty in uncertain places. I smiled, not with pride, but with gratitude. Because the longer you trade, the more you realize that markets are not chaos, they're consciousness. And if you listen closely enough, you start to hear the rhythm of your own mind inside them. I closed my journal with one last note. The market is the mirror. My job is to look clearly. And with that, the week was over. No euphoria, no exhaustion. Just a quiet understanding that in trading, as in life, peace doesn't come from control. It comes from awareness. When the noise fades and the candles stop moving, what remains? It's a question I used to avoid. Because silence in trading feels unnatural, like a space you're supposed to fill with action, with charts, with opinions. But over time, I've learned that silence is where the truth hides. The week after CPI and FOMC always feels slower. The market breathes again. Volatility softens. And somewhere in that calm, I can finally hear myself think, or maybe not think, just observe. I used to believe trading psychology was about mastering emotions, controlling them, suppressing them, becoming unshakable. But that was never the point. The goal isn't to silence emotion, it's to see it clearly, to let it move through without resistance. Because emotions aren't the enemy. Attachment is. Fear is not the problem. Clinging to the need to not feel fear, that's the trap. In the early years, every week like this one left me drained, exhausted. I'd either lose sleep from overtrading or stay up late obsessing over what I missed. Every candle felt personal. Every outcome felt like a verdict on who I was. But that's the delusion of ego, the belief that the market cares. The market doesn't care. And that's what makes it sacred, because in that indifference, there's honesty. The market is pure cause and effect, no judgment, no favoritism, no emotion. It reflects exactly what you bring into it. Bring fear and you'll find chaos. Bring greed and you'll find traps. Bring awareness and you'll find rhythm. Trading at its deepest level isn't about making money. It's about making contact with your own patterns, your own impulses, your own truth. The chart just gives shape to what was already inside you. That's why I keep a journal. Not to track trades, but to track consciousness. Every entry is a record of how I met uncertainty. Some days I meet it with clarity, other days with resistance. But either way, I meet it. And that's the work. When people ask me what mastery in trading feels like, I tell them this. It feels like being still while everything around you moves. It feels like watching a storm pass without needing to step into it. It feels like standing at the edge of chaos and recognizing it as part of you. Mastery isn't about eliminating emotion. It's about expanding awareness until emotion no longer defines you. That's the essence of mind over markets. Not dominance, but alignment. Not prediction, but presence. Not control, but calm observation. Sometimes I wonder how many traders out there are still fighting the same war I used to fight, the war against themselves. Chasing certainty in a world built on uncertainty. Trying to outthink randomness instead of learning to breathe with it. But eventually, if they stay long enough, they'll discover what I did. The market isn't a puzzle to be solved. It's a mirror to be understood. And once you understand the mirror, you stop trying to win. You start trying to see. That's when the work transforms into something beautiful. Every loss becomes feedback. Every hesitation becomes a teacher. Every win becomes a test of humility. Trading stops being about outcome. It becomes about awareness, about growth, about returning to that still point inside you, the place untouched by candles or charts or numbers. Because beneath all the strategies, all the analysis, all the probabilities, there's only one question left to answer. Can you stay present while the world moves? If you can, the market becomes simple. Not easy, but simple. Because then you're no longer reacting, you're observing, you're not chasing the next move. You're waiting for the next moment of clarity. And in that clarity, everything aligns, not just your trades, but your mind. That's what this week taught me again. CPI, FOMC, two storms, and in between them stillness. Stillness that isn't passive, but powerful. Stillness that listens instead of speaks. Stillness that sees without needing to predict. That still point is the real edge. The place where awareness meets execution, where patience meets precision, where the trader meets himself. When you reach that place, trading becomes more than a profession. It becomes a practice, a meditation, a mirror. And when you look into that mirror long enough, you stop seeing candles and you start seeing consciousness. That's the truth no indicator can show. That's the wisdom no system can teach. That's the mastery that doesn't need to be proven. Because once you've found peace in uncertainty, you've already won the only game that ever mattered. When the charts fade to black and the day's noise settles, one question always remains. Who were you while you traded? The market doesn't remember your profits. It remembers your patterns. It reflects your fears, your patience, your ego, your evolution. So let this be your reminder. Every trade is a mirror. Every week, a lesson. And every moment you choose awareness over impulse, you win. Because the ultimate edge isn't technical. It's psychological. It's emotional clarity in a world of noise. This is mind over markets. And the real work always begins within.